Good morning to you on Thursday, November the 4th. Right, this is WTI Crude. Now, I've been talking about this all week, a potential head and shoulders pattern. I have warned that selling in the hope of a right shoulder forming is never a good idea because you have to wait for a break below the neckline. Well, actually, I wish we hadn't. I certainly do now because look how that did form as I had wondered. Right, we have got potentially, therefore, the left shoulder, the head, and the right shoulder to a head and shoulders reversal pattern. Now, we closed the day yesterday below the neckline, as you can see on the daily chart. So this really did look quite negative. There we go. Big red candle, closed below the neckline, actually closed bang on the 23.6% fib support around sort of 1820, 8010. Now we've bounced off there, so it's slightly confusing. Do I go with the Fibonacci support level or do I go with the head and shoulders neckline? Well, I've got to go with the head and shoulders neckline, I think. Although you can see we're creeping up above there now. So yes, it is tricky. Let's just have a look at the 1 hour chart. We're going to have some negative moving average crossovers there. That's to be expected when you know that the market dumped so severely yesterday. So we do have the 100 crossing below the 200 hour moving average, obviously the 15 hour heading lower. The price is obviously broken below all the moving averages on the hourly chart, even the 500 hour moving average. So that's pretty negative. We are just holding this 23.6% fib. I don't think that's going to hold for too long, although we're seeing a greater bounce back than I would have expected. I mean, I really would have expected us to hold below sort of 80, 90, 8100. So it's tricky. You can see the first bounce back topped exactly at the trend line, at the neckline, and now we're pushing through. I don't know quite what to do here. I think this is a head and shoulders pattern, but obviously I'm going to need to see the price certainly back below 80.60. So we'll have to see how long this bounce back happens. It's one to watch, that's for sure. Definitely a break below yesterday's low, which is at 79.88. Today's low is just fractionally above there. That for me would certainly be a confirmed sell signal, because we would have definitely then broken below the 23.6% fib. So it's, yeah, as I say, slightly tricky situation at the moment. We're not holding below the neckline as I would have, obviously liked, because that would be a very, very clear sell signal. So it might be a wait and see situation, see how today develops. But yeah, as I say, certainly break below yesterday's low, sort of 79.90. Should confirm that the fib level has been broken, the neckline has been clearly broken, and then we're heading for 7700, 7650. Okay, we'll see how that plays out. Good luck if you're trading today. Well, the Fed has talked about tapering, but that was pretty much on the cards, wasn't it? It has to happen with inflation going up. They're not as concerned about inflation as I think I am, but I'm sure the Fed's not going to listen to me. What else can I tell you? The Forex markets are mostly trading sideways, so there's really not a lot for me to add on to what I've written in the reports. Most of the levels are working, obviously not all of them. That would never be the case. Gold is very, very tricky. I do focus on gold a lot because I know so many people like to trade it, but this really doesn't say anything to me at all. I've got no clue where gold is going next. So I'll leave it there for today, and we'll have a chat again tomorrow morning. Good luck today.